I want to ask you something. Do you actually know what you're paying your investment platform every year? Not roughly, but the actual figure. Because most people don't, and that's exactly what these platforms are counting on. A small percentage fee sounds harmless, but on a 100K portfolio, the difference between the cheapest and most expensive platform on this list is over £1,000 a year every single year. Today I'm comparing six of the biggest investment platforms: Vanguard, Trading 212, AJ Bell, Interactive Investor, Hargreaves Lansdown, and Barclays. And I'm going to tell you in plain English what each one actually costs, who each one is right for, and who wins at every stage of your wealth journey. And let's keep it simple. Before we start, 2026 has been genuinely a big year for platform fees. Pretty much every platform on this list has changed their pricing in the last 6 months. Hargreaves Lansdown cut their fees for the first time in 12 years. Interactive Investor completely restructured their plans. And Barclays, they abolished their annual platform fee entirely in June 2026. So if you looked into this a year ago, the landscape has shifted. This is the up-to-date picture. So right, let's go through them one by one, and I'll keep each platform to about a minute, and then I'll give you the clear verdict at the end. Vanguard, the classic beginner choice, for good reason. Their fee is simple. It's 0.15% each year, capped at £375 once your pot hits 250k. No dealing fees on their funds. But there's a catch that trips people up. Since January 2025, there's a minimum charge of £4 a month, and that's the equivalent of £48 a year if your total across all Vanguard accounts is under £32,000. So if you've got £10,000 with them, you are actually paying 0.48% effectively. And that's worse than some of the more expensive platforms on this list. The other big limitation is that you can only invest in Vanguard's own funds. There are no individual shares and no other fund managers. There are no investment trusts. But if you're happy with a simple global tracker, index fund, and nothing else, Vanguard is clean and cheap. If you ever want more choice, you'll hit a wall. So who's it best for? For those passive investors with over £32,000 who want a simple, low-cost fund portfolio and nothing else. Trading 212. It is the disruptor, and in 2026, it's hard to argue with the headline zero platform fee, zero dealing charges. If you're buying GBP denominated ETFs, think a global tracker listed in pounds, your platform cost is genuinely zero. The only fee that ever applies is a 0.15% foreign exchange fee if you buy something priced in a different currency, like US stocks, and 0.15% is actually the lowest foreign exchange fee of any major UK platform. Their ISA is also a flexible ISA, which means you can take money out and put it back in the same tax year without losing your allowance. Most platforms don't offer that. Please check with the latest up-to-date information before you make any changes. The big news is that Trading 212 launched a SIP in 2026, also with no platform fee, so you can now do your pension with them too. What is the catch? There are no traditional funds, unit trusts, OEICs. You're limited to stocks and ETFs. That's over 13,000 options though, so it's not exactly sparse, but if you specifically want active fund managers, Trading 212 can't help you with that. So it's best for cost-focused investors who are happy with ETFs and shares, especially for ISA investing. AJ Bell. AJ Bell sits in what I'd call the sweet spot of the market. More choice than Trading 212 or Vanguard, and significantly cheaper than Hargreaves Lansdown. Their platform is priced at 0.25% per year on funds. But here's where it gets interesting for shares and ETFs. The annual fee is capped at just £42 a year for ISA holders, and that means once your share or ETF holdings are worth more than £17,000, your platform fee stops growing. Every pound above that compounds for free in terms of custody cost. For the SIP, the share fee cap is £120 a year, which is still very reasonable. The dealing costs are £5 per trade for shares and £1.50 for funds. From May 2026, regular monthly investing became free. The investment range is wide, with funds, shares, ETFs, investment trusts, bonds, pretty much everything except crypto, and they offer a lifetime ISA and junior ISA, which most platforms don't. The one downside is that their research tools aren't quite as deep as Hargreaves Lansdown, but you're paying significantly less, so that's the trade-off. Who's it best for? It is best for those investors who want the full range of investments, funds, shares, trusts, at a cost well before HL, particularly if you have £30,000 upwards. Interactive Investor. Interactive Investor, or II, works completely differently to everyone else on the list. Instead of a percentage, they charge a flat monthly fee regardless of how much you've invested, and that's key to understanding the cost. From February 2026, they simplified things to 3 plans. There's a core, a plus, and a premium. The core costs you £72 a year and covers portfolios up to 100k and includes your ISA, SIP, and general account all in one. The plus will cost more, £180 a year for portfolios over 100k, the same bundle plus free trade each month and lower FX fees. The premium costs even more, £480 a year. This is best for frequent traders who want the most active features. The thing that makes II shine is that ISA and SIP are bundled together. Most platforms charge you separately for each. With II, you pay one fee and you get everything. Where does a flat fee start making sense? Roughly from about £50,000 upwards, the flat fee beats any percentage. The bigger your portfolio grows, the more money II saves you versus percentage-based platforms. At £500,000, II Plus costs £180 a year, whereas Hargreaves Lansdown would charge you over £1,500. So II is best for growing portfolios, especially those who want both an ISA and a SIP, and the flat fee becomes seriously powerful from £50,000 and above. Hargreaves Lansdown. HL is the biggest investment platform in the UK, and for the years the biggest also meant most expensive. In March 2026, they finally changed their fees for the first time since 2014. Here's where they stand now. The platform fee sits around 0.35% per year on ISAs and SIPs, and that's down from 0.45%, a genuine improvement. The dealing fee for shares and ETFs is £6.95 per trade, down from the previous £11.95, which is also better. For fund dealing, this is now at £1.95 per trade, and this is new. Previously, fund trades were free, and if you switch between funds regularly, this is a real additional cost. The cap on share and ETF holdings is now £150 per year per account. That sounds reasonable, but it tripled from the old cap of £45, so some existing customers actually are paying more. Here's the honest take on HL. They have the best research tools in the UK retail market. The wealth shortlist, the fund analysis, and the app, the phone support, it all is genuinely excellent. You're paying a premium and you do get something in return, but on pure cost, they're the most expensive percentage fee platform on this list, and they don't offer a flexible ISA. HL is best for investors who value research, quality, and want to manage everything under one roof. It's best suited to fund-heavy portfolios in the 50k to 200k range, where the 0.35% fee is competitive, but the research also adds real value. Barclays. This is one that's flown under the radar, and I think it's about to become a much bigger conversation. Barclays rebranded their investment platform from Smart Investor to Direct Investing in 2026, And in June, they did something that made me do a double take. They removed their annual platform fee entirely. Gone. Zero. So here's what you now pay with Barclays. The annual platform fee is zero for ISA and general account holders. The fund dealing fee, £0. So buying and selling funds is completely free. Shares and ETFs, still £6 per trade. The SIP has a £150 a year flat fee via their pension partner, which is AJ Bell. Why does this matter? Because until now, the only zero platform fees were apps like Trading 212 that didn't offer traditional funds. Barclays now gives you 2,000 funds at zero annual cost alongside 4,000 plus shares. That combination genuinely didn't exist before. The downside is that it will cost you £6 per ETF trade, which is fine for long-term investors, but not great if you're trading frequently. And Barclays doesn't offer flexible ISA. But if you're a buy and hold investor for funds who really already banks with Barclays, the maths is hard to ignore. So Barclays is best for buy and hold fund investors, particularly those already with Barclays, and offers exceptional value for fund ISAs at any portfolio size. So who actually wins? Right, here it is. Simply, you need to ask yourself two questions to find your winner. How much you've got, and are you mainly in funds or shares and ETFs? If you're just starting out with under £50,000 as a total portfolio, go with Trading 212 or Barclays. They both charge zero in annual platform fees, and Trading 212 if you want a brilliant app, ETFs and shares, and fractional investing from just £1. Go with Barclays if you want a wider range of funds, and if you're already with Barclays as a customer, it makes very logical sense. Avoid Vanguard when you have under £32,000 a year because their minimum charge makes them uncompetitive at this level. If you've built a portfolio of 50k to 100k, then Barclays Fund ISA or Interactive Investor, ISA and SIP together are the way to go. If you're all investing through an ISA and mainly holding funds, Barclays is still free. But if you've got a SIP as well, and at this wealth level, you really should, it's II Core Plan, which is £72 a year covering both accounts, is offering you outstanding value. AJ Bell is also strong here, particularly if you want the full investment range, including trusts and bonds. If you're at £100,000 to £250,000, Interactive Investor is where the flat fees start winning. At 100k, HL charges you £350 a year, AJ Bell £260 a year, Vanguard £150, but only on their own funds, and II covers everything for £72 to £180 a year. That's a clear gap, and the bigger your portfolio, the wider the gap gets. AJ Bell remains a strong runner-up if you want a percentage model with a good cap. If you're now in the big league with 250k to 500k, Interactive Investor Plus is not even a competition. At 500k, HL will cost you £1,500 a year. II will only cost you £180. That's a difference of over £1,300 every single year just in platform fees before you even invest in anything. Barclays remains free for fund holding ISA holders, but II gives you everything in one place, a flat and predictable cost. So here's what I want you to take away from this. Platform fees are not glamorous. Nobody talks about them at dinner parties, but they are one of the few things in investing you can actually control. And over 20 or 30 years, the difference between the right and wrong platform is not hundreds of pounds, it's potentially tens of thousands. The good news is that in 2026, this has been the best year in a long time for UK investors on fees. Real competition is driving down costs, and Barclays dropping their fee entirely was a genuine surprise. II has been bundling the SIP for free with the ISA, and this is a genuinely good deal. And Trading 212 has been free for years and now offers you that SIP as well. So if you haven't reviewed your platform recently, do it. And if you want help to understand what to look for when you switch, it's important to do some research or to contact a financial advisor. Remember, this is general information and not personal financial advice. Your right platform depends on your investing style and what accounts you hold and how often you trade. Always check the latest fees directly with any platform before you move your money. And if you found this useful, please subscribe to our channel because this stuff changes and I'll keep you updated as time moves on. Please leave us a comment about which platform you're on and if you're thinking of switching. See you in the next one.